Good evening, I'm Giuseppe Basile, I'm the analyst and trader. You can find at the website www.fibstalker.com, and since the beginning of the year you can also find me at the address www.fibstalkertrading.com. Good evening, today is Sunday, January the 18th, 2015, and this video is a video review of the market I follow. This week I'm going to cover a little bit the Swiss franc versus the US dollar and the euro due to what happened obviously last week. This video is only distributed on Sundays to my followers. If you want to receive this video, just go to fibstalker.com and subscribe for my newsletter, and you're going to receive this video every Sunday. So let's start, and let's have a look at the euro. The euro has continued moving lower, and as you can see, it's well into this area, and now the focus is going to be, of course, on a continued move lower. And there is a sequence, there is a measure move here, which I mentioned in the past, and now that we are not seeing participation at these levels, it's good to keep that in mind. That's high to lows, and you will remember that in the past we were looking at this market after the we will do whatever it takes of Mario Draghi here at in July 2012. There was a measure move that was respected, this 128.78, which I hoped would bring price into the first target. That never happened because on the other side, and now it's very clear, also because there is no participation at this level. There was an all the way halfway back, which was initially not respected in 2009 and then again in 2011, but since 2014, beginning of 2014, has been respected. So where this measure moves, so participation on the short side is bringing this price is well below that 119. Let me show that in a little bit clearer here. 111.94. That's the key level for us. Why is that? Because the sequence of measure move, actually the large sequence here on the monthly is going to be pierced on the downside, which means that there will be no participation from algorithms below that level. So this market is moving into this 110.89, and let me move the scale a little bit here so it's clearer for all actually, and as you can see it's 108.95. If the market gets there, and there is a good probability that price will get there now, we can basically kiss goodbye the euro, because before or after, of course, there will be a reaction, and we can kiss goodbye the euro, but there might be potential opportunities here for a rally from 109 into again 124. So we're talking about historic opportunities here, and it's possible that the market will continue lower and then bounce into this 124.37 and then just continuing lower into parity and well below parity. So that's what I'm looking for in this market, and that's my anticipation for this year as well. And if you have not done that already, you can, if you want to subscribe, my premium webinar at FX Street is going to be next Tuesday, January 20th at 1 p.m. GMT. Moving to the SP500 here. So SP500, as we can see from the chart, has been continuing higher. We know that on the weekly time frame we an aggressive extensions, was not able to bring price into 2000s to 21,000s here, but the market has actually the possibility still to go there. I want also to remind you that I'm enrolling for the February-March session of my Fibstalker Methods coaching program, where I teach how to use the effects of algorithms on price to identify these important levels, as well as to time the counter trend moves into these levels. If you want to learn methodology that can make you successful in 2015 and beyond, just come to fibstalkertrading.com or drop me an email. So looking at the daily time frame here, we can see that we were able to, before the fact, identify this bounce here 1967, and now the market is getting into that level again. The market has not gotten into that level just yet, so there's no need to anticipate any longs here. Participation has not been happening at that level again, and this level has to be retested as well, so we don't know whether that level will retest successfully. And as you can see here, the shorts are still in control apparently in this environment, so I'll be waiting for a retest of 1970. Moving to the dollar index, no news here for the index. We know that the index is going to move into large weekly levels here. We know that eventually this market will get into 100, and it's also possible for this market to get into 104 and higher. So this is the current conditions on the dollar index suggest continued move lower for the euro. Moving to the pound, the gold here, we noted now since 2013 that this market entered an area of potential support, and although price has dipped into this area deeply, you have always to respect these areas. And as you can see now, this last week we had a nice move higher in this market. I also noticed that this market was actually moving in a lateral move here, but this lateral move, which can be identified by these trend lines, notice that I don't trade trend lines. That's not part of my method. In my Fibstalker Methods coaching program, I demonstrate how following the algorithms actually provides much better signals. But people who follow traditional tech analysis and get involved in this kind of breakout that do not allow managing risk in the proper way are seeing here a continued move higher. Now, this market is now extended and has the possibility to reach out into that measure move that I traced before. Although it was a failed measure move, it started being respected, as we saw from 2 weeks ago here, and now there is the potential for this market to get into 1306 here, and if that's the case, we will keep following this market in extension. So if we get there and retrace, the 1273 level is going to become important. Moving to the US dollars Japanese yen, congrats to those who followed my suggestions here and the trading plan I gave at the beginning of August. We were here and I mentioned two targets, 108 first and then 115.90, and this market has been trading the next extension long. We were able to identify this with almost 2 weeks in advance here, more than 1 week in advance, and now as you can see, and this is more evident on the daily time frame, this level is being retested. Notice that this level is a valid level for longs, and it gave a free risk trade here, another free risk trade here after testing it, but we have to remember that the weekly is neutral in this market at the moment, so it's still possible for this market to break below the 114.60 and go to trade all the way into the next weekly long, the next weekly participation of algorithms on the long side, which is at 1280 here. So if we the second test is always dangerous test. If we lose the 114.59 here, there is the possibility for a retrace into the 1275, and it would be very important to time this level there. Moving to the euro versus Japanese yen, congrats again here. We knew that this market was due for a for a deep correction, and the reason for that is if you remember the way we modeled this market, it was an extension which actually um, the, was initially respected but then was broken here. It was mid of October, and I mentioned the basket setup that eventually had to come back down. So this market again is this measure move and participation is not there, of course, and this market now has the potential to retrace all the way into this 121.89. It might look a very long way here, but that's not possible. That's very possible considering the continued weakness of this market. Now, if this market puts up a rally, the rally might bring price into 139.90, and that would be a great opportunity to short again this market. Moving to the pound versus the Japanese yen. This market, on the other hand, is still on a sequence of measure move. Very good, very nice sequence of measure move that I've been timing since 2012 here. And there was participation at this 165.80 level, and price went into the first target, and then of course came to trade the next measure move, extension long. As you can see, a participation 168.80, price into the first target, and again we are in that same sequence of measure move here. This is not a market to short, it's a market to play long. We are still in a sequence of measure move long on the daily, and the next level of participation is going to be 173.36. So if you are short this market, that's the place where you want to remove your position, 173.36. The moving to the pound versus Japanese yen. Um, um, Sorry, the pound versus yen. We just reviewed that. Maybe the euro versus Canadian dollar, and finally this level went into the 138.56. You can go to my website and on May the 28th, 29, if I remember well. I made a review of this market for Dukascopy. You'll find the video there, the video interview there, and I mentioned 138 50 level as a potential level to be tested. Notice how this level has to be tested before there might be a significant participation from program trading. So when we get 50 pips from these levels, that's not an indication of participation. In order to start seeing participation or testing participation, we need to get well into that level, and now we will need to understand whether this market is going to bounce at this level or not, and of course there is an extension, there is a jumping extension here that I teach my student to identify, and as you can see here, there was participation in this 141.80, and price is actually getting into that level, the 137.52, 137.45. We could consider this level actually hit. So this market is not going to reverse on the upside until the 61% level 142.01 or 2 is not pierced on the downside, on the upside. So this market could actually go back to 141.17 and still be in a move lower on the daily time frame. Moving to the pound versus the US dollar, this market has continued moving lower into and well below that, all the way halfway back here. Remember that this market has had a strong, like why the euro. In fact, this market trades together with the euro, had a move into lower price here, and now it's possible that this 149.19 be pierced, and if that's the case and this market bounce, we're going to look at an extension short. Maybe we will see where this market stops before we get along here. Moving to the Australian dollar versus dollar, same situation here. This market is still in a measure move lower. And you remember that the market has traded this measure move here, hitting the first target, is not yet into that long range 50% retracement there, so there is the possibility for this market to retrace into the next level short, and that would be that 08437, which would bring price right into that 7839. So obviously, if the US dollar will keep being strong, that's where we can see this market on the daily time frame. This market could be reacting at the moment to another measure move here, as we can see here. So there is the potential for this market to just continue lower. So if the 08288 is tested again at the beginning of the week and the sequence of measure move fails, applying the Fib stalking timing technique, this is an entry short. If you want to learn the Fib stalking timing technique, I have a Fib stalker method coaching program. You can join me on February and March, and I'm going to delight you with the new ways of trading the market and timing the markets. Moving to US dollar versus Canadian dollar, this market has kept moving higher. You remember that I changed the outlook of this market, and we were able to find after the fact the anchor that is driving the algorithms that trade in this market. As you can see, as soon as we got into that second target, this trace is valid, because as soon as we got there, we start seeing profit taking from the 120.28. Now, if this market retraces, we know already what is going to retrace. So although we identified this level here after the fact, we know that now if this market retraces, the next level where we're going to look at for to buy this market for support is going to be 116.61. And remember that this market has now the potential to go all the way into 126 actually, and we identified this level. That's the all the way halfway back, the all full range 50% retracement here. So if we retrace on this large time frame, it's going to be a fantastic 1000 pip opportunity here. So that's the kind of trade I'm looking at, and that's the kind of trades I can help you timing. If you are interested in learning new ways and how the algorithms affect price. Moving to the New Zealand dollar versus the US dollar, this market has been hovering now for months, since October, on this 077, and this level is still valid. When we look at these large levels, you have to always apply the Fib stalking timing technique. This market is moving laterally at the moment. Shorts have failed, and longs are failed, and after that shorts have failed. So this market has the potential to come back to 077, and there we should start seeing a potential participation in this market, because we are on top on a larger weekly time frame, with the possibility to get into 79.24. moving to the US dollar versus the Swiss franc. This is the big beast this week. What happened here is that, as we all know, the Swiss franc was pegged to the euro, and the Swiss central bank decided to remove the peg, and that caused a gap, basically, which is not visible here, but that's exactly what happened, and that's put in jeopardy and actually in danger a few brokers. Now, if we look at the structure of price of what we have here on the 4-hour time frames, we can see that this market is still pushing lower. Now, if we get to the larger time frame here, we can actually see that on the weekly time frame, this market has actually went to test the all the way halfway back here. And can you trust this? Well, we don't have a lot of price structure here, so the only price structure we can trust is the 4-hour here, but that's not enough for me. So I will stay away from this market, and that's my suggestion for you as well. Just stay away and wait for this market to show the hand. Now, if you're very aggressive above 088.79, the current sequence of measurement on the 4-hour, but remember that we don't have all the price structure here. It's all missing from 101 to 88, 89 here, 90. So I would not actually adventure myself into try to understand what's going on without price structure, without price information. And lastly, the euro versus the Swiss franc, which is actually the peg that was removed. And here again, as you can see, the peg very clearly here on the 240 minutes. Pegging means pushing, basically, as required, the Swiss central bank to keep pushing money into the forex markets in order to keep the Swiss franc trading very close to the euro. Once that has been removed, that's what happened to price. And you could also make the case that this was somehow in the cards, because how algorithms um, were actually trading or positioned before the peg. Well, there was participation on the downside on 121.97. So as soon as that peg was removed, algorithms started pushing this price down again. So the market actually moved in the direction of the positioning of the algorithms in this weekly extension long. So this is it for this week. I hope you enjoyed this review. If you want to receive more information about the way I look at the market, and specifically my coaching program as well, just drop an email. Just hit reply. I answer personally every email, or go to fibstalkertrading.com. I look forward to work with you personally, and I promise that the information that you learn in the Fibstalker Method Coaching Program is unique. There's a lot of my research as well, and will totally drastically change the way you look at the market, and I believe the potential for your success as well. Thank you very much again, and have a great trading and non-trading week. Bye bye now.